We've got traders at the New York Stock Exchange and the CME to game how this one ends. Scott Redler, Santa Claus anywhere in sight to save us in a rally here?
Well, we'll have to reevaluate that on Wednesday when Powell does speak. At this point, I think traders are really watching the February lows very closely. That's about 25.35 to 25.50, which we just kissed. But you have to put things in perspective. Like we just saw a stat saying it's the worst December since 1980, but we're still only 10% off the highs in the S&P cash, a little bit more. We've been in a 9-year bull run, so sometimes corrective phases do run their course, but overall it's healthy.
What do you care that the Russell is in bear market now? It's an outright down 20% from its recent highs, and so what do we have? I'm looking at a very ugly picture here year to date as well.
Well, usually when you get into a definition bear market, it's almost a time to buy. And thank goodness for the Russell being so weak because it led us lower. It gave traders clues to reduce the risk because the S&P and technology can follow. So every time the Russell made new lows within a few days, so did other sectors. So we needed this as an indicator to take some risk off. So when we finally see the Russell reverse, I'm not exactly sure where that'll be, then maybe that'll give us some clues that we're headed for some kind of oversold bounce, and perhaps that could be a little bit closer to Wednesday.
Okay, so guys, Scott just indicated to you what he's watching for. When the Russell reverses, he thinks that then we'll get that bounce from having been oversold. Larry, I don't want to gloss over the Federal Reserve here, even though we have till Wednesday before we find out their decision. What is your best guess? Do you think that Jay Powell, the head of the Federal Reserve, will blink? Or, as Fed funds futures indicate, there's about a 78% chance that we will see one more rate hike. How important, then, is the language he comes out with and that Q&A? Folks, that will be during our hour. 3 p.m. Eastern. He will be taking questions and answers on Wednesday. Those are the things that tend to move the markets. Larry.
Yeah, no, exactly. I mean, he's going to raise rates this week. 78%, 100%. I think they're in a winless proposition. If he comes out overly dovish, yeah, I think we'll get a bounce back, but it'll be short-lived. If he's status quo, especially on the language, as you mentioned, that would be a disaster for the market, especially with inflation expectations. It matters so much to get to reality. 10-year tips, you know, inflation-protected securities are implying 10-year inflation at 1.5%. That's way different than what the Fed's implying. Also with the dots, how many times are they going to raise rates in 2019, 2020? They need to lower that by 1 just to get back to reality, recognizing also, I guess, giving the idea that they're more data dependent than they have been over the past 6 months. Getting back to that and giving that message to investors, I think that would go a long way at solidifying the market.
Okay, I just want to tell folks we just touched session lows for a moment there with the Dow and the S&P. The Dow's low of the session down 51 points, and the S&P low down 51, and we've got the Dow low down 472 right now. We're off that at the moment, but Phil Flynn, you're our oil guy, but you know I'm sure that some of that plays in. We have oil below $50 a barrel. Consumers love it. But why isn't it being seen as a positive? Usually every penny off the price means $1 billion in all consumers in America's pockets.
It's because it's really reflecting a concern that the global economy is slowing down. You know, we keep talking about having a lot of oil, and if you look at the actual numbers, we really don't. I mean, if you look at demand in the United States last week, it was near a record high. Imports into China last month, a record high. But the sell-off in oil getting disconnected from the fact we're seeing these strong numbers suggests that this is the canary in the coal mine. That oil below 50 is a signal we are indeed going into a recession, even though the numbers haven't shown it yet. Now, is it real or is it reality? I mean, we're seeing a lot of fear-based trading right now. There's a lot of unanswered questions when it comes to the economy. Are we going to get a trade deal? Is the government going to shut down? You know, is the Fed going to pause? And if they do pause, is that going to signal a bad thing about the economy? And are they going to neutral? So all of those things are playing into that, and it raises those concerns that the oil price being lower is a signal of bad things to come.
And I need to pick your brain on the 10-year right now, 2.861. For the yield on the 10-year. What is that? Quickly, what's the message that our viewers should get from that?
I think what it is flight to quality. You know, people are nervous. They're pulling in their horns right now. They're looking for safety. But it also tells me that we're seeing a lot of fear right now, a lot of uncertainty. So, yeah, I listen, I think the world can look a lot different at the end of the week when we get an answer to some of these unanswered questions. But right now it's just, you know, run for cover and hide under your pillows. That's all you can do.
No. Well, bring the TV with you. Everybody bring the TV with you and watch Fox Business. Thank you so much.
Your device.
Yeah,
right,
Scott, Larry,
you.
Phil, good to see you very much. We appreciate it.